I'll caveat by saying again, like I own a lot of Bitcoin personally. We don't do a ton with Bitcoin in our funds because it's not a fundamental asset. But in my opinion, not investment advice, that Bitcoin is less risky today than it has ever been. It is less risky at 100,000 than it was at 5,000 because of the fact that it has reached this critical point, a critical mass where it is being viewed as a very liquid uh, uh, safer asset as collateral, as potential store of value, as potential gold replacement. Like there's just more eyeballs and more money and more options of people buying this than ever before, right? Again, I said the ETF was one step forward, two steps back. I mean, the one step forward was again, it's democratizing access to Bitcoin from people who otherwise maybe wouldn't have touched this, right? So I think the strategic reserve is just one component of that. I mean, look at the progression, right? First, you went from like just crypto native kind of tech junkies buying Bitcoin. Then eventually it was macro guys, and you had like the Paul Tudor Jones announcement back in like 2020. And then it went to corporations. You had Tesla and MicroStrategy, and now we're talking government. So I mean, like that's the natural evolution of an investor base. To go from basically, cyberpunk to hedge funds to corporations to RIAs to ultimately governments, it doesn't stop, right? That kind of movement just doesn't just stop. So I think it's actually shocking to me that more investors aren't front running that strategic reserve at this point because it's one of the most obvious end kind of games that we've ever seen. And like I said, it's just way less risky today than it's ever been.